Assalamu Alaikum everyone, welcome back to another video. I hope you're having a wonderful day. If you have been with me for the last whatever years, you know I love dividend growth companies. These are companies that have increased their dividends every single year for 60 plus years, 10 plus years, 15 plus years, no matter what's happening in the overall market. Now, these are companies that have excellent free cash flow, majority of them. They do have a very low payout ratio, some of them, and they increase their dividends every single year. The reason I love these companies is because not only are they paying you that consistent dividends, they're also increasing it every single year. And I just basically see that as these companies are actually, giving me, can you imagine getting basically salary increase every single year? And these companies, that's exactly what they do. So you invest your money, you leave it with them, and they increase that every single year. There's companies in my portfolio that have been here for at least 4 years now, and consistently these companies have increased that dividend from where it was to where they are now, to the point where my yield on cost is actually way higher than my current basically yield for these companies. And some of those companies actually include some of the companies that have done really well for me over the last whatever years when it comes to price appreciation. And one of those companies is Broadcom. Broadcom, actually, I was buying this company when it was very cheap, when it had almost 3%, if not over, dividend yield. Right now it's like 1 point something. Is because it's gone up so much, and as you can see here, it's quite basically up about 350% since then. So the companies that I'm going to talk about today might not be on this list that you see right now in this portfolio, but these are companies that have also increased. So just to give you this is my actual portfolio, and as you can see, Broadcom, Visa, S&P Global, Automatic Data Processing, Cummins, Home Depot, MasterCard, these companies have increased their dividend every single year. This one has increased to over 60 years, this one over 50 years, this one has over 10 something plus years. Home Depot is exactly the same. MasterCard and Visa very similar. So although they're top companies, they do increase that dividend, and I really like that. So what I'm going to do today is to share with you guys 5 companies that have increased their dividend recently, and they are really good companies. Some of them are very much overvalued right now, so you have to be careful. So overall, the companies that my portfolio today is actually doing well, because the entire market is up. So we've now had a bit of a clarity with regards to China situation with the US, and between US and China tariffs and so on, and for that reason the portfolio just today is up over 4,000%. 3.7% up just today, which is absolutely ridiculous, genuinely. But I'm not complaining. I'm still buying. I actually did make some buys today, which I will be sharing with the community today, InshaAllah. If you haven't joined us in the Patreon account, do so. Do that soon, InshaAllah. If you can, that would be absolutely amazing. This is where I share all my buys and sells and so on, like family portfolios, and you can basically reach out to me if you need to, InshaAllah. So what I'm going to do now is basically just quickly show you these 5 companies. But before I do that, I just want you to be careful. Okay, now fear and greed and all that is coming back, people will stop buying stocks. But what I will definitely say to you guys is I wouldn't worry too much about what was happening in the overall market. As long as you buy in high quality businesses and you want to hold them for a very long time, whether you buy it now or tomorrow or next day, it doesn't matter. Dollar cost average every single month. That's what I've been doing for the last 5 years, and that's what I'm going to continue doing, InshaAllah, in the next whatever years. And that's my plan, and that's what I plan to do, InshaAllah. And again, I have been sharing this with you guys. If you go back to my old videos, you will see exactly what I have been doing. And now I'm just going to give you some information about each one of the companies, and like I said, some of them might seem a little bit overvalued, but they have all increased basically their dividends recently. That's why I'm talking about them today. And the first one is KLA. This is one of the companies that I used to own in the portfolio. I sold it when it was about closer to $400 basically dollars per share. Right now we're looking at about over $750 per share. I wish I hold on to this one because I really do like the company, but as you can see here, it has a market cap of closer to $93 billion. It has a wide moat. The latest increase was 12%, and the 5-year growth rate of 14%, which is absolutely amazing. So that means last 5 years basically they have on average increased about 14% basically on compound annual growth rate, which is really good. And that's 14 years of basically increasing that dividend. Annually you get $7.60. Dividend safety is 71%. The highest any company can get is 90% on Simply Safe dividend. Profit margin, return on equity, return on invested capital, probably one of the best companies out there. Free cash flow right now $3.5 billion, which is absolutely amazing. I like companies that have excellent free cash flow, because that means they can buy back their own shares, they can pay off dividends, they can pay off debt, pay dividends as well, that increase that dividend if they need to, acquire other businesses. So they can do a lot with that money, which is really good. So you always want to buy companies that have excellent free cash flow and potentially growing free cash flow, because this one here, even the free cash flow per share, I was just looking at it, is quite interesting one. Okay, look at the free cash flow per share here, has increased every single year. So you can see earnings per share has increased every single year for the last 10 years. And as well as that, basically you've got the free cash flow per share. And this is supposed to be some sort of a cyclical business. Yes, there was a dip in 2024, but then look at the bounce back again. And that has been basically heading in the right direction, which is quite nice to see. And now, as you can see here, they're expecting the earnings to grow about 37% this year. Revenue is expected to grow 23%. It's basically right now expensive. So I will say it's about 12% right now. Too expensive, if you like. $670 per share is where they think the price should be. So it needs to pull back 12%, maybe more than that. If we see a massive dip in the market, this will probably be a very good buy potentially to add to your portfolio. The next one that we're looking at today is Apple. Is probably one of the, well, second biggest company in the S&P 500. I'm sure after today is a lot more than that, but we'll see. Closer to $3 trillion and wide moat, $211 per share right now. As you can see, the dividend is only 1%. Okay, it's not even 1%, it's a 0.5%, to be fair. It's just rounding it out for whatever reason. This one is also 1%, but the payout ratio is only 14%, which means they can increase. So they basically is using about 14% of their net income, okay, to pay us dividends, which is absolutely fine. Latest increase was only 4%, so they're not really too bothered about, basically they paying the dividends, they increasing it, but not massively, which is not great, because it's the 6 year and the 5 year is only 6% for them. They've done that for the last 12 years, which is fine. To be honest with you, the fact that they've got a very low payout ratio, I'm sure sooner or later they will start increasing. Once the company is already a mature company, sooner or later they've got over closer to $100 billion of free cash flow. So they're going to have to give out some of that as a free cash flow, and we will see what happens. But you get $1 basically for every share of this company you own. 99% is basically, like I said earlier, is the highest any company can get. Profit margin, return on equity, return on invested capital, really, really good. Like I said, $98 billion of free cash flow right now. They're expecting the earnings to grow about 7%, which is not basically great for a company like Apple. And revenue is basically supposed to be about 4%. And right now it's a little bit expensive. So about basically $200 per share is where they think the price should be. I will definitely add a margin of safety to this, so at least another 10% on top of that. So if it pulls back maybe about 15% or so, then potentially you can look into buying that company, okay, or adding to your portfolio. The next one is Parker Hannifin Corporation. This is a company that has been on my radar for a very, very long time, but never got the chance because it's always been too expensive for me. 500 is where they think the price should be. Right now it's $671 per share, 82 billion market cap. So it's not a small company at all. The dividends is basically 1.1%. The payout ratio is only 25%, but the latest increase double digits, which is absolutely amazing to see. The 5-year growth rate 14%, 68 years of increase in that dividend. Let me just double check that, because that sounds just a bit too much. Let's go and check that out. So there you go, 68 years of dividend growth streak. Okay, and that's basically without reducing, increasing every single year. And like I said, just probably one of the best companies when it comes to the industrials. I like the industrials companies out there. The annually you get $7.20. The dividend basically safety is 94%. Profit margin, return on equity, return on invested capital is absolutely fine. Over $3 billion of free cash flow right now. EPS is expected to grow about 5%. Revenue is just about to decline about 1%. Okay, so it's kind of a little bit cyclical business, but like I said, it seems very expensive right now. But I just want to see actually one more thing about this company, because what I want to do is see the earnings. So we know what's happening. There's a bit of a decline next year, but what happens after that? Okay, it's about 4% next in the following year. Then the year after is about 6%, 3%, and so on, and then 8% when it comes to EPS, 9% after that. So yeah, so basically in the long run it seems okay, because that's the type of company it is. However, right now just basically they expect a little bit of decline. because of that, we might actually see a price declining in the next few months. We'll see what happens. Next one is J&J. J&J is one of the companies that I've had in my portfolio because of the lawsuit situation that's been ongoing for quite some time. I actually sold my basically shares, took a little bit of profit off the table, and since then really hasn't done much. But you can see this is probably one of the best. Every dividend basically investor or anyone who likes dividend growth companies buys this company because of this reliability. 62 years of increase in that dividend. Last 6 years, 5 years, they've done about 6%. Latest increase 5%, and basically the payout ratio is only 45%. So it's actually quite low if you think about it. Now, safety was 99%. This is what you get, $5.20 for every share of this company that you own. Again, it's a very high quality business. Basically, triple A rated credit, basically credit rated. It's basically has a better credit rating. I think this is the only two companies that have a better credit rating than the US government itself, and that's J&J and Microsoft. So 20 billion basically free cash flow right now. They're expecting the earnings to grow about 6%, which is really good. Okay, that's closer to Apple basically, and revenue is about 3%. Morningstar is saying is right now about 6% upside from where we are, so $164 per share is where they think there should be. If you were interested in this company, I'll probably get it in just below $150 per share, because that's the sort of a level it's been holding for quite some time. But yeah, it hasn't really done much over the last year or so, but you know, who knows what happens in moving forward. And the final company I want to share with you guys today is Procter & Gamble, another company that is very similar to J&J, another dividend lovers. You know, anyone who basically invests in dividend invests in this company, because I buy their product like there's no tomorrow. Every time we go to the shops, I just pick up without even thinking about it. Head and Shoulders, I just get it. I don't really care. And this huge company, 370 billion. Just look at this. These two very, very similar in terms of that. Price was very similar. That 3% dividend yield. What is this one? 2.6. This one is 3.3. Wow, this. Okay, so 2.6 is what you get. That's the range has been over 2.5 to 2, basically 3% over the last whatever years. Payout ratio is slightly higher than I would have liked. It's about 60%, but still safe. Latest increase was 5%, again similar to J&J, for basically 6 years when it comes to this, and 68 years of increase in that dividend. They're not even, Kings are basically 50 plus years. These companies have done 60 plus years, closer to 70 years now. Annually, you get $4.23. Dividend safety of 99%. All of this information is absolutely fine. Profit margin, return on equity, return on invested capital, $15 billion of free cash flow right now. Expected to grow about 3% this year. And then there's a bit of a decline. Okay, and again, I want to check this one out, because just to see what happens after that. So we're expecting earnings about 3%. Basically another 3%, another 5%, which is basically typical for this business, right? So we're expecting about that 3% to 7% every single year. But when it comes to revenue, there's a bit of a decline this year. But the following year, we're expecting about 3% again, back to normal, but you know, that 4% to 7% sort of thing. Now, basically 13% basically downside right now if you buy the stock. As I think $140 per share is where they think the price should be. It's $160 right now, so you might need to wait quite some time to actually be able. And again, this is one of those, you know, very low beta that don't move when the markets are down 7%. They are like up tiny bit right now. Let me check. Actually, look, the markets are up so much. Look at this, all these companies, high beta companies, 5%, you know, 8%, 6%, whatever they are, they're all up a lot. Procter & Gamble is only at just less than 2%. J&J is actually just flat, almost basically, and it's not even up. So they are very like, but if the markets were down right now, 10%, 5%, this will be down maybe 1 or 2%. So basically, you get in when the markets are up, they don't go up, but when markets are down, they actually very kind of stable, if you like. So all of these companies are Sharia compliant. So you can check out on Zoya if you want to. Basically, that is the latest information from Zoya. Again, I have nothing to do with Zoya. I'm just giving you that information that they use, and they've now kind of updated. They've got like a different standards if you want to check that out. InshaAllah. So like I said, I have no affiliation. I'm just saying, as a new investor, you might want to check that out, because user friendly wise is actually quite a nice one to use. There you go. That's basically the 5 companies I wanted to share with you guys today. Again, this is the type of businesses I really like. I've owned these basically 4 at some point in my life. This is kind of, like I said, is the only one that basically I've never owned, and the reason is because it's always been too expensive. Apple, I sold it a long time ago, took some profit off the table. J&J, because of that legal situation, and I do like this one here, but right now I basically feel like Lamb Research probably be a better option than this one because it seems slightly cheaper than this one. But yeah, that's the 5 companies I wanted to share with you guys. I hope you're enjoying the content. If you are, of course, join us on the Patreon account where you can get access to all the buys, latest buys and sales that I'm making. InshaAllah, have a wonderful day. Assalamu Alaikum.